Hi, today is Sunday the 4th of July, Independence Day in the US, and this is the SPX Outook for the beginning of the shorter week. As you can see on this 4-hour chart, the market ended the week on a very bullish note, and it is likely that because it was a shorter day, there are probably orders still in the book, and unless something happens over the next 2 days, there will be some follow through and maybe going to 43.80. Last week I mentioned that the 4300 was indeed a strong resistance on the 1-hour chart, but the 4-hour chart already showed this one as a stronger resistance. This gray line is not a very strong resistance. So the market passed the stall level here, and again in a market that is overall still in a grind up mode, although it accelerated on Friday, but it was still a fairly sustainable, steeper ascent of course, but still sustainable. This one is not really sustainable, so we could go for a last shoot, and it's likely to go into profit taking. There are lots of reasons the market would correct. First, it's really overbought, but inflation, good NFP. I mean, inflation is definitely there, and it's not transient or transitory as the Fed is saying. The problem is that the Fed will not be able to reduce and let alone close the quantitative easing. Who is going to buy US bonds at this point? The tension with China is fierce. There are tensions in the South China Sea, Eastern China Sea. Well, this weekend is the 100th anniversary of the CCP. Although Xi Jinping didn't say that they're going to go for outright invasion, probably want to stick to their soft power approach, nibbling, encroaching, but without confronting the US nations, US democracies. So the chances of a conflict are pushed down the road. They could happen maybe later in the year. Of course, it could be a domino effect. But the fact is that at the moment, the US cannot afford to stop quantitative easing. There's a lot of influx into China because they make their bonds more attractive. Really, we could be in a bond crisis. How it would then permeate through to equities, we don't know. And yes, earnings later in the month could give us some clue. This is a very uneasy market. It is not a very stable market. But the ground-up mode from a pure technical perspective is still fairly okay, except again for this shoot later in the week. So I would say the market will go for the strong resistance, and we will see whether it really starts retracing. It's long overdue, and that would make a lot of sense later in the week. If we look at the longer time frame, daily, here we see that the market is going up way too fast, and we see that the strong resistance is the same here. So this one will probably hold where 4300 didn't. So on this one we have an angle of attack or gradient that is too steep to be sustainable. That being said, again, because the underpinning of this bull market is the quantitative easing, the chances of an outright reversal would be limited. It's likely that buyers will still buy in the dips. There are far too much liquidities floating around. So on this one, still bullish, but we note that the strong resistance is the same. Now, lastly, the 1-hour chart, same strong resistance. So again, I would suspect this one will hold. It's gone above the channel that we saw for the last 2 to 3 weeks. It's amazing to see that on our 20th of June, market hit 4140 and we are over 200 points. But we see that when the market goes up sharply, it does not really retrace. It tested this one for support and went up again on a slow gradient. So again, we may have retracement and probably sticking back to the upward channel. So we will watch on Tuesday and maybe Wednesday. We'll check for a possible profit taking to 4300. 42.96 is still not the pivot, but the chances of going back to 42.20 are limited. We could draw a fib just to have an idea where the market could take us. We can even look at what it would be on strong resistance. We see first fib would be on 42.85 to 4300, so close to pivot. And if we check with this one, we see that fibs are 42.75, 42.45, and the strongest one is actually on support, 42.20. So if this one breaks, this one is definitely going to hold for some time. So for Tuesday and Wednesday, again up, then down to channel lows, maybe pivot, and we will see whether some selling acceleration takes place, but I really don't see it coming this week. Markets will be waiting for earnings for further clues. Let's not forget that we have the FOMC report on Wednesday. That could also shed some light on what the Fed is really thinking. Okay, that is it for now. I wish you a lovely Independence Day, or Sunday if you're not on the western side of the pond, and there will be more updates on Slack as usual. I know that this type of SPX Outlook should be repeated on Wednesday for the second part of the week, because I still base my outlook on the 4-hour chart with tactical updates on a 1-hour chart, and the 4-hour chart cannot give us an outlook for more than 2 days. Anyway, just ask me any questions or follow me on Slack for updates, and time permitting, I will soon also record an SPX Outlook on Wednesdays for the second week. Thank you for watching, and bye for now.